I'm Head of Communications here at Yield App, and today I'm joined by Tim Frost, our CEO, and Justin Wright, our CFO and COO. Today, Tim and Justin will be answering questions sent in by community members across our social media channels, as well as some sent in during this live show. Those that do get picked and read out will win an exclusive Yield App merch pack, so make sure to keep an eye on your inboxes if you do hear your question read out. Okay, so let's get started. Hi Tim, hi Justin, how are you doing today?
Fine, thank you. Good evening, Rebecca.
Good evening. Thank you for joining. Okay, so let's get straight in with our first question, which was asked by Kildras Z. What did the recent crypto crash mean for Yield App itself? Did the return of the funds take a hit? Was our insurance pool used to cover some loss? What did it mean for DeFi? Did it expose any fundamental issues behind the mechanics? And what areas are lacking? So that's a big question to start off with. Perhaps, Justin, you could just start us off by talking about the current crash and what it meant for the fund itself.
Yeah, sure. I mean, that is a big question. There's a lot of different parts in there. So, in many ways, I don't think it's unhealthy that we've, had a pullback in the market overall in terms of some of these different crypto assets out there. It's been an incredible, 12 to 18 months if you focus just around decentralized finance, for example. And as part of putting this business together and putting our processes in place and our fund strategies, it's important that these are tested as well on the way through. So I think from the first part of that question, how has it affected the fund? The fund is fine. Obviously, from the very start on this, it was about making sure that capital that's invested is not at risk, so we protect that principle, ensuring that we can create alpha or edge returns to be able to meet our obligations for the customers in terms of paying the customers their APY. I think where it's helped us a little bit, like I said, is, theoretically, trying to model what happens when you have a 30, 40, 50% pullback across the board, is great on a spreadsheet or it's great on paper or whatever systems you're using, but until you actually do it, it's hard to be exactly sure what happens. So I think, the broader positive to take away from all this, if you look at the different elements of how cryptocurrencies are traded, you have a lot of leverage in the market, so people trade on margin basis. I think we saw over the last 10 days, or certainly in those 2 days when we had a really aggressive pullback, there were some delays at some exchanges in terms of withdrawals, but nothing systematic in the sense, or systemic in the sense of the risk that you would typically find if you had a 60% pullback in more traditional markets. And I think, as I said, if you look at some of the different products that are manufactured through these smart contracts, whether that's lending and borrowing, there's some collateral and asset backing there, whether it's the leverage trading on the markets, down to the different types of alternative coins you can farm from some of the yield farms and the different parts that make up those returns there. I think everything held up. Well, I think everything proved itself very well through, in parts and really extreme volatility, and then of course an aggressive pullback. So I think from our perspective, we're happy with the way we've performed. It's good to understand that and take some of those lessons away and understand how we, use that going forward. But I think overall, I think decentralized finance, cryptocurrency markets and exchanges, really got a tick in the box in terms of managing and weathering, such an aggressive market move, considering the sheer value of the changes in the base assets.
Yeah, it was a big crash. It was definitely a big crash. I mean, Tim, do you have any thoughts on the DeFi space itself through this recent market pullback?
Well, definitely. I mean, there was kind of expected turbulence. I mean, we've kind of been expecting a pullback for quite some time. We think it was actually quite overdue. So, but DeFi overall, I mean, we as a business, we have to kind of, I guess, anticipate every type of market cycle and scenario. And so, when there is a market pullback, I mean, naturally they're in the short term, yields can compress, which we did see, as the entire market has seen. That has not affected overall our performance at all. We've had very strong kind of positions, and we're never, I guess, leveraged, as kind of Justin says. I mean, our base assets are never at risk, so the base capital. So, we take quite a conservative approach towards DeFi, and I think, yeah, more than anything, I mean, you've seen an explosion, especially over the last year, and so yes, a pullback is quite normal and healthy. I think the big thing is what people see is I guess the speculators out there that are looking at some of the underlying asset valued in USD, and so yes, that has had a 50% pullback, but in the end, like, decentralized exchanges are still working and growing, and I would say the ecosystem's healthier than ever right now.
So there's nothing to worry about, basically. DeFi is still going strong, and the Yield App Fund is safe as houses.
Yeah, I think like any industry, it's going to go through some growing pains, but of course, it's hard to, as I said at the beginning, it's hard to understand just how much they will be impacted until you have these types of events in market. And as I said, I think overall, the entire broader DeFi industry has held up not only incredibly well, but I think it's probably exceeded people's expectations when this has actually come around. I think it's a really healthy thing. So.
Good, a nice healthy correction then. So let's move on to question 2, and this comes from Crypto and excuse me if I'm not pronouncing that correctly. What security mechanism is in place to safeguard customer assets? Tim, perhaps you might want to take this one.
Yeah, sure. I guess that's going to be touched on kind of a number of points. So when you have the basic deposits with us, we have our hot wallets that should be deposited into as a client. We currently use BitGo wallets, where we have insured custody on that side that is insured up to over $100 million now on that side. We are migrating to an upgraded wallet solution as well in the near term. But the moment you click that invest button, as you know, you are invested into now our DeFi One kind of fund portfolio position. And so once you have moved into this position, I think that the one thing that we want people to always be just cognizant of is your base asset is never at risk. So we are using capital, and we are able to deploy this into various kind of qualified DeFi positions, investment positions that have went through kind of rigorous audits and into a place where we're very secure, and we have a very strong understanding where we're going with that. So it's a lot of work, I would say, that goes into everything. Our CTO, he built a top 20 exchange worldwide. He's ran security for a Fortune 500 company before joining us, and if anything, I'm have to be very patient with him because of the amount of security that he demands that we go through before doing anything, and oftentimes it slows us up, very temporarily, but it's always for the best. So, so the risk, I guess, is on number levels. Just the before kind of going into any type of investment, I mean, we have a risk committee that meets on a bi-weekly basis. We go through a list of potential investments and current positions and any kind of systemic risks that belong kind of anywhere in the ecosystem or even out of our control. So we do take this serious. We try to take a very conventional kind of financial institution approach to everything we do.
Fantastic. And actually, just to circle back a bit on the first question, there was something in there around insurance. Now, there was an announcement recently about SteadyState. Justin, would you like to talk a little bit about the partnership that we recently announced with SteadyState?
Yeah, sure. So, again, touching in terms of the way we approach this more from a conventional insurance perspective when we first set out, we keep a reserve, and I think it was mentioned in one of these questions, aside to basically protect some of these assets or some of the shocks in the market. Now, of course, because of the way that the insurance market is today and the speed at which decentralized finance is growing, we weren't able to find a solution we felt that was necessarily fit for purpose for what we want it for, in a way that we will be able to effectively purchase insurance across the assets that we have invested in terms of those liabilities. And I think it's very important here, because following on from what Tim said, of course, we go through our processes to make sure that we have very safe and secure investment strategies, and we go through a number of processes to reach that level of comfort. At the end of the day, of course, it is still cryptocurrency, and there will be from time to time events, and whether, we've seen some of these over the last 18 months, sadly, whether it's been exploits of flash loans and we don't touch flash loans. There's been exploits in vaults and we don't use vaults. So there are examples where no matter how many different steps you take, at the end of the day, there will still be some risk in the market. And it was about coming at it from a different angle from our perspective and saying, what are the shortfalls? What are we not getting, or where do we feel this doesn't meet our requirements? So what is the solution and how do we solve this? And really from there, we got together with a group of young guys, and this is Jonathan Libby, who's heading up SteadyState. And really they've pulled this, they've pulled the whole thing apart from end to end and tried to come at it from every angle and come up with a solution whereby it is a hybrid between how you would understand and price risk in traditional insurance models or traditional markets, but of course you have much less data because it's such a new asset class or a new industry, and then how do you manufacture the product around it that there is a risk return trade-off for the different participants in order to be able to achieve the cover we want. So in our case, if we have $100 million or $200 million invested, can we get $150 million of that covered through an insurance? And more importantly, if there is a qualified claim, can we actually draw down on that? Will it get paid out? And really that's where it came from in terms of what was the problem and how do we come up with a solution. And there's been fantastic progress made with different protocols out there and different approaches, but until now we haven't really found one we feel that meets how we would like to see it or our needs. Rather than pushing it onto the customer, how can we bring this solution to market, where we're the customer for that, and we can, effectively help our users and our customers and give them that extra layer of protection.
Fantastic. So this is like a whole new solution, effectively, that SteadyState is developing right now.
Correct.
Okay, great. Okay, that's exciting. So we'll keep everybody up to date with that. So let's move on to question 3, which comes from Uber Joseph, who asks, are there deposit and withdrawal charges? If yes, how much? Now, Tim, I think you've got some news on that one. Is that right?
Yeah, absolutely. Actually, someone came to me kind of earlier today and asked about that, and then this is something that was kind of overdue on us kind of adjusting our withdrawal rates down. So actually, we just did that earlier today. We just lowered our withdrawal rates on Tether and USDC to $10 and 20 YLD withdrawal fee and 0.01, so on Ether. And so, we want to listen to the community and whatever, what you guys want, we want to try to cater to you and build a better ecosystem. So we've lowered them and we plan on keeping them low moving forward.
Fantastic. So that's a cut to withdrawal fees that has gone live today, and we still have no fees to deposit. Is that correct?
Yes, that's correct, and that'll always be the case.
Yeah, with a minimum amount, I believe.
Yes, we want to keep that minimum amount. So yes, please do respect that and do send in the minimum amount.
Yeah, make sure
at some point you might not get your deposit if you don't follow the rules. So.
Right. Make sure that we advertise those amounts as well. I believe it's $100 at the moment is the minimum equivalent deposit across all assets.
Yes, that is correct.
Okay, fantastic. Okay, so big news, everybody. Cuts to withdrawal fees, which I know is something the community has been after for a while. So I hope that comes as good news to many of you. Okay, so question 4 comes, I'm going to struggle to pronounce this one. I'm going to do my best. Remizgius Jinder. I'm really sorry. I will make sure that the team posts your name so that you know that you won your exclusive merch pack. So you ask, could we get automatic compound interest without moving funds from wallet to portfolio and vice versa? Tim, again, I'll throw this your way. I believe this is an upcoming feature.
Yes, absolutely. So, we never really made it the intention of kind of going through this process to be able to essentially compound your investment. So, we do advise actually to not kind of, currently go through that process of, redeeming and reinvesting your portfolio. I think if you kind of ran out the math on your side, it probably would not be worthwhile. But yes, auto compounding is going to be here when we do launch the new application.
Okay. And do we have anything else coming up?
Well, we got a lot of things coming up. I guess it's probably long-winded. I think so many people have heard about so much that's coming. I kind of use this time maybe to touch on, the process of, what we go through to kind of get to this point. We have grown very fast. We launched on a public launch in about mid-February. We've gone from, basically 0 to about 43,000 users during this first 3 months. And from basically a brand new startup fund to, I think over $120 million to today into the fund of people that have, trusted us with their assets and investments. So we've grown to over, I think, 42 people full-time on the staff, kind of with a very qualified global team. So there's been so much that's happening, and when you're running such an active, growing business, it is very hard to kind of build a new product. We made a kind of decision a few months ago that, we see it very clearly. Like we're going to bring Yield App to millions of users, and probably faster than ever really anticipated. So we made a decision that we need to kind of rebuild Yield App from the ground up. So we are doing this. We have a new native wallet system that's being built that will be kind of cross-chain compatible. So it will be compatible with Binance Smart Chain, and it will be others such as like Polygon, and then we're continue to, I guess, explore different chains that we want to be able to support. Adding more assets. So we have obviously a lot more assets that will be added, I guess when we hit V2 as we start to grow, and different investment opportunities that you can keep earning yields on more and more of your assets. Fiat rails. Some of this is just, you guys have probably heard over and over. We have a lot of great fiat rail partners that are coming in the near future, but they will be implemented once we've kind of been able to launch the new app. The native application in the App Store, we did make a decision not to push V1 to the app stores. The biggest reason, we just don't want to launch the ultimate where we see this really home run product that we're developing right now until we get this new application fully developed, and then you'll see shortly after a native app in your Android and iOS stores. Card program, and more investment options. So there is a timeline to roll out. We haven't had a lot of product rollouts in the near term. We do have a lot of products kind of ready to start rolling out in different funds and different currencies. Once we kind of do get to that entirely new that rollout that will be coming into the near term.
And just to touch again on the sorry, Justin, did you want to jump in there?
Obviously, Tim's, it's important to talk again about the things that we've had in the pipeline planned. I think it's equally important just to understand, when we set out to do this business, there were some really key foundations or principles of what we were trying to do, which is, can we bridge, cryptocurrency type wealth management investments and create, better performing returns or high yields for the customers, and can we do it in a simple, safe, and secure manner? So we're very excited ourselves about all of the things coming down the pipeline, but of course V1 today still does what we set out to do, and as part of that, it's always a balance and a fine line between, do we rush something? Do we cut a corner because, there's, some pent up demand for one particular product or one particular aspect of this overall, foundation build, and positioning ourselves for the next step of growth, or do we do it properly? And, obviously we'd love to have this out yesterday, but of course, some of these things do take time. And as we go down this pathway, it's about making sure that things work, things are tested, as you know, if we'd have planned to build an internal wallet system with cross-chain capability 5 months ago, people would think you're mad. The markets move very quickly. So it's about trying to say, what are the things we have to do? What are the most important things about this? That's safety and security, of course, and that's always a big part of it. But really, how do we, over the next few months, put in place all of the different elements we need so that we can really, just have this, long-term and steady and valuable growth, and continue to work towards bringing product to market in the way that we intended. So I just wanted to mention the V1 still does what we set out to do.
Right. So it's important to make sure that you're doing your core business while making sure that you're getting the next bit right before you roll it out effectively.
Yeah, but and it's also about thinking ahead a little bit, because if we react to every little thing in the market every couple of months, you'd actually never make a huge amount of progress. So it's about, what are the things we need, as I said, to create that foundation so that we can we could be a little more agile going forward, that we can adapt to market, we can, react to what's happening in the market, but we can do this longer term without having to go through this process of a rebuild, which is what we've done for the last few months, which is making incredible progress, by the way. So it is very exciting.
Yeah, I personally know how hard our developers are working. I can speak to that. So let's move on to question 5. And in fact, we've already touched on this. Tim touched on it in his answer. We've got a question from Sero33119053, who says, hello. Hi, Sero, lots of numbers. When do you plan to release swapping assets, not only to YLD in the Yield app platform, but other assets as well? Tim, you've already covered that, there is an ambition to have other assets on the platform. So maybe you could talk about plans for swapping, and then maybe the first assets that you plan to have come on board, the new ones.
Yeah, absolutely. That's actually, I think, something I probably didn't even touch on in that little update. But the in-app swaps, right now, you can essentially acquire YLD for stablecoin and Ether. It will be, when we kind of get to this kind of real build out, there'll be this RFQ, platform request for quote. So if anyone's kind of familiar with what you have, like your Binance, where you can build a swap between assets. So it's like an exchange, experience. So if you're holding 10,000 USDT and you want to swap to Ether, you'll be able to do that in the app and in that very competitive rate. So that is actually under development right now as well. One of our kind of exciting releases. We want to be able to offer more and more for our community to be able to hedge, if you want to be able to hedge on maybe a price volatility, maybe to kind of be able to rebuy back in a position. However you want to, handle your own personal assets, but we want to be able to do it all at Yield app. So you'll see that in Q3, the first iteration, and we'll continue to grow out after that.
Okay, great. And how about new assets coming on board? What's the first few we have planned?
Well, the next one for sure is Bitcoin. So having Bitcoin deposits, we're actively kind of building out our Bitcoin fund strategy. We've been kind of working on this for the last few months. We're actually in the final stages of kind of getting that ready to go. So expect news on that, I would say, in the short term. We're also working on a Filecoin strategy, and that's not something that's certain at this stage, but we feel very good about the future of Filecoin, to be able to offer the ability to both acquire Filecoin and be able to invest in for a long term. So there are two that are coming down the pipeline, as well as additional stable coins will be added in the near term as well.
That's great. I'm sure BTC holders would love to start earning some good yield on their holdings right now, considering the hammering they're taking on the price. I know I would, so I'm looking forward to that fund launch. Okay, great. So let's move on to question 6, which comes from Count Many Crypto, Will we see staking and or other services on other blockchains in 2021? So you touched on this already, Tim. It's a topical one. Obviously, there's some really big growth happening on some chains, Polygon being one. So what plans do we have to roll out staking and or services on other blockchains this year?
Well, as far as the investment strategy wise, we already are. So we have been for some time. And so it has been part of our strategy. We've seen probably a variety of partnerships that we've had, and we're definitely very, very excited about everything that's happening on Polygon. And we're kind of actively working on multiple chains where, essentially our portfolio team, their job is to find the yields and chase the yields wherever they might be. And it is very true already. They're not all on the Ethereum blockchain. So again, this always goes back to our original kind of premise of, we take care of all the heavy lifting. So you just have to put your capital with us and let us do the hard work.
Okay. And what about allowing users to deposit from other chains? Is that something that we'll be able to offer?
Yeah, yes, you'll see this in the new wallet system. So we have built our own new wallet system that's coming very, very soon as well. And it will be cross-chain compatible. So BSC, Binance Smart Chain, is there, and you will see Polygon as well coming in the near term. So we're exploring other opportunities. We just want to kind of just continue to go where the community wants us to go.
Right, absolutely. That's exciting. I look forward to that myself as well. Okay, so let's move on to question 7. And this comes from Mixmaster Boys, I believe from Twitter. Hi, Yield team. Hi, Mixmaster. You're offering a very attractive yield. We've seen a number of new players start out with high yields only to reduce them over time. Many existing and potential customers are probably wondering if you can sustain high yields, also during changing market conditions. So this is a solid portfolio question. So Justin, I think this is one for you.
No problem. I think, we always made it very clear from the beginning that ultimately the market conditions will determine, how these products work. We've been very capable and proven ourselves through this recent volatility to be able to do what we do. And I think there's going to be a couple of parts to this answer. So, ultimately, the yields that are attainable in cryptocurrencies, decentralized finance, should naturally be much higher than more traditional finance, just by the risk that's associated with the asset class, some of the complexity, the fact that it's such a nascent asset class, and that's another thing we've always made very clear. So in that sense, I don't think it's a huge surprise, the 8 to 10% that you see around the market. Now, of course, there's been some pretty outlandish and wild returns in some of the more exotic types of strategies that individuals might undertake on their own, but of course they're managing their own portfolios, their own capital, and their own risk. So for us, it comes back to that, the founding tenets or principles that we have. It's about the security. So, in terms of yield farming specifically, cross-chain opportunities, those things obviously we continue to research and analyze on a ongoing basis. And Tim just alluded to this in terms of the fact that we already deployed capital on different chains today. I think if you look at what's happened recently, and again, coming back there, where we see ourselves in 1 year, 18 months, 2 years, 3 years, it is about that sustainability. So, with everything crypto related, you already have a crossover towards, traditional type financial trading strategies. So you've got, there's been a lot of activity on stablecoin, funding arbitrage, cross-exchange. These are dollar-neutral strategies that are perfectly well hedged. There's a lot of different opportunities out there in terms of how do we, identify and understand what that diversification across a portfolio looks like, how that interplays with what is happening in the market at any one time. Because, of course, we cannot move away from our founding principles, which is we have to keep that principle safe, those customers' assets safe. Yes, we need to and want to make a return and generate alpha and find those edges, because ultimately we have an obligation to pay the customers their APYs. And of course, we are running a business. As Tim mentioned, with 42 staff, it's important that we also run a business commercially and profitably as well. So there's a few different things in there. You know, the market ultimately and the competition will determine where yields go. And that will be, you're always going to find, you know, some subsidies here and there, some new players pop up offering fantastic rewards. And you've seen this in yield farming. Oh, it's 3,000% today. And by the time, you know, 3 people and his dog get into there, you know, it drops down to 30%, and everyone packs up and they leave and they move on to the next thing. So in terms of that rapid rotation of capital between these different opportunities, that doesn't necessarily help when you have a larger portfolio. So of course, this is what happens when you begin to grow, and it's about understanding how that growth impacts our ability to deploy, the speed at which we move, and how we keep those funds safe. And it's the same in any traditional portfolio management environment. You know, investing $20 million, you're not likely to move the needle in most of the different investments you go into, whether it's bonds or it's equities. When you start, you know, doing this in the billions, of course, you tend to move the market. So it's a lovely problem to have so much, you know, in terms of assets under management. But of course, you've got to be very mindful that you don't become bigger than the market. You don't have that concentration risk, that you do remain nimble and can react quickly to changes in markets. So these are the things that happen continuously, you know, and we're always looking at, you know, as we grow, what does this look like? When the market changes, how does this impact us? And how do we continue to, as I said, to you know, maintain that safety, get that diversification, and what are those opportunities? And I think, you know, as part of the, you know, these technology upgrades, some of these product capabilities, you've seen recently, you know, we've launched a corporate applications for professional investors. You know, how do we incorporate some of this into these strategies as well? Are there going to be, as we move forward, will there be different types of product opportunities? Will there be different risk levels that people could take? So all of these things are always considered as well. At the moment, it's about taking what we've got, getting this to the next stage with our new infrastructure, and from there, building out and putting to market what are those different opportunities for the different types of customers we have.
So effectively, what you're saying, you know, the focus is always on making sure that the stability of the yield, the APY that we're offering is there. Because for a lot of people, you know, 10% basic APY, especially if you're coming from a traditional finance background, seems enormous. But kind of what you're saying is actually there's even riskier opportunities out there, and that's not what we're doing. We're actually doing something a lot more sustainable.
Vanilla, right? I think it's probably
Okay.
it is pretty vanilla for if you think of some of the opportunities we could compare it to, even across some of the more secure, you know, protocols that are out there. But I'll give you an example. So, you know, prior to effectively this pullback in market, you know, 10 days ago, some of the margin rates on the arbitrage between stable coins and spots and forwards were ranging from 30 to 50% a year in a completely riskless or dollar neutral strategy. But of course, with that pullback in market, they've come down to 0.5%. These things will move over time. And of course, if you are an individual trying to replicate or mirror these strategies, depending on your own sophistication, your ability to manage these different exchange accounts, the sophistication of product or how exotic the product might be, putting your hedging strategies on, doing your yield farming, unless you can react and move quickly to the market, or you have a reasonable pool of capital to begin with, it becomes you know, quite a difficult thing to achieve. And what's likely to happen, or probably has happened to some people, is those wonderful returns you were getting on, you know, 3 weeks ago have suddenly become a lot less. And that's really, you know, again, where we came into this to say, how do we have the right people, the right systems, the right understanding and ability to execute on this, so that we can level that out over a period of time, if that's 3 months, 6 months, 9 months, 1 year.
Okay, great. I think that's a nice comprehensive answer to how we generate our yield. If you do have any other questions on that, though, please do feel free to send them our way. So the next question comes from the Gradlon. This is another one for you, Justin, so pay attention. Do you think ISO 9001 quality management and ISO 27001 information security management could be interesting quality standards and certifications for Yield App, as is the case in the traditional banking industry? So Justin, do you think that these sorts of certifications could add to Yield App? And if not, what others are you pursuing right now?
I think any professional external audit certification, ISO assurances are valuable for any business ultimately. I mean, more specifically to, the industry we're in, if you look at across of the different activities we have, so whether it's, SaaS services, certainly in terms of the amount of data we take on because we manage customers and customer information, I think for us, SOC 2 compliance is much more appropriate for what we do. It's about understanding our business at a service level, the business processes we have, the technology we have.
What SOC 2 stands for, just for anybody that's not aware?
It's service organization compliance, effectively. And SOC 1 is more related to the financial aspect of your business and how you manage that. And SOC 2 is more to do, as I said, with your compliance overall of your service delivery. So it's going to be how you protect your data, your security, your technology systems, your business processes. And what happens with these is you have to go through an external audit. It takes a long time to put all of these, different elements into place to be able to meet these audits. But when we started the business, we already set out with that intent anyway. So as we've, from day one and grown, we have been building out this document set and these business processes to be able to meet that. And I think probably early next year, we will look to go through an audit process ourselves. I mean, one of the things we're doing at the moment is we are expanding our compliance team significantly. So as we move towards, more jurisdictional regulation, if we look at what's happening out there, it's about how do we take what we have today, what we've done well today, and how do we improve on that? And this all feeds back into, the SOC 2 type compliance audits or ISOs, depending on what type of organization you have. So I think the long and short of it is, yes, I think it is valuable because I think it gives comfort to people when, if they can rely on these types of qualifications. It means that we've had to meet certain levels of standard obligation and reporting and go through that external audit process. But I have to say it's probably not going to be until early next year, in part because we have obviously a big rebuild coming through. We're continuing to grow. The market's continuing to mature. We're still very, very, very early in this journey as a business. It may feel like, we've done 80% of the work, but I can pretty much assure you we've probably only done 5 or 10% of it, psychologically speaking, from the point of where we want to be and the people we have and what we need to do going forward.
And where do we want to be ultimately on the regulation side, the ultimate goal?
Well, I think ultimately it's being able to service the US as a market, for example. Again, we've seen in the last few weeks so many different changes. So depending on whether it's the FCA, whether it's the Hong Kong authorities, whether it's China, there's always going to be these, ups and downs in terms of whether you can do it this week, do we ban retail, is it more around the AML perspective? At the end of the day, most of it comes down to tax, AML, and KYC, and they're three quite key components. I think the tax you can put third in line, but of course, if you want to go and operate in the US, you have a lot of different federal laws. There's a huge amount of obligation on you as a business in terms of your presence there and how you operate in that market. For a young company, it's quite a hard thing to do, especially as you're still changing and growing as a business. And this comes back to whether it's the SOC compliance, whether it's the different jurisdictions and the different activities we do, and going, and going up that regulatory scale or pathway. But again, if you want to be regulated in the US as a compliant entity in 18 months' time, you have to be doing all these things now and before, which is what we've done. So I think, the answer is the US ultimately. Can we get there in the time frame we like? I would hope so. As I said, we're adding quite a few people to the compliance team in the short term, and it's about now taking that original roadmap we had and how do we really start to drive that forward as well. So, part of that will be around the portfolio management side. I touched on earlier how we look at the portfolio overall and where we think the opportunities in market are. So we're confident in the next few weeks there'll be some more information around that in terms of some of that investment management services regulation as well. So it's a continuous journey, and I think the one thing out of any financial services business, fintech business, cryptocurrency, the slowest part will always be the regulation.
Yeah, I'm sure that our US users will be very, very happy to hear that, though. I know that they're very, very keen to get on board, and we can assure you we are doing everything we can to make that happen. So let's move on.
I'm just going to correct you there. We don't have any US users.
Well, no, we don't. Our US community. No, you're quite right. I must say that our US based community members, of which we do have many passionate people that would love to join us, and we are working very hard to make sure that you can join us. So let's move to some live questions. We've got some live questions coming in. Number one, do we participate in the SteadyState private sale, or do you got something cooking for T5 hodlers? This is from Steve Phillips through YouTube. So I think what Steve is wondering is whether or not he's going to get a sneaky access to SteadyState. Who wants to tackle that one?
Yeah, sure. I'll do it. Yeah, so absolutely. So anyone that wants to be kind of participating into this private sale for SteadyState, I think the best thing to do, go into their Telegram, just kind of tell one of the admins or just kind of announce that you would like to be part, and then someone will share that kind of data room with you. And just do mention that you are kind of a tier 5 Wildly holder as well. So this is our partner project, and so we do kind of encourage anyone that wants to kind of participate in this private sale. We love to get a lot of yield lab community involved. So it's quite highly anticipated already. There's a lot of intrigue. So but we're going to take a preference for the yield lab community. So please just go ahead and reach out there, and they'll kind of get you started.
So if you are a tier 5 member, then just make sure you register your interest on Telegram. And indeed, if you are a member of any tier, but do make sure that you mention you're a tier 5 member if you do send that message. Okay, so number 2, TRC20 USDT deposit support, please. I think this is more a request than anything else. Would anyone like to answer that one?
Yeah, so that is something where it's on the roadmap. We don't have a timeline on that, but we realize USDT on Tron is everyone uses it. It's actually more highly used in Ethereum now. So moving money freely, across is what the vision of blockchain-based currencies was. So if it needs to happen on other chains, we will adopt it.
Okay, great. We have a question from Lucas Lauas on YouTube, and he is asking, will the like of Apple Pay be added to the Yield App platform?
There's no time frame on this at the moment, but we love to get all these requests kind of coming forward. So we are constantly kind of building out our future kind of timeline. So in a kind of distant roadmap, we're very interested in being cardless payments, and as the world continues to go completely cashless at a future date. So I personally like the idea of just being compatible globally. Our biggest concern right now is going to be initially creating an infrastructure that our community can use globally. And so right now the most widely used payment method is going to be through those plastic cards. So while I don't necessarily like that, until there's a global infrastructure that's kind of caught up, and there's definitely defined winners, it'll kind of clearly define where we're going to get going long term.
Yeah, it seems to me the kind of trajectory of moving DeFi and TradFi, traditional finance, closer together. The first step very much is those cards that can allow people to spend their crypto. Of course, you're a co-founder of Wright, so you know all about that. And then, we're going to slowly see some more integrations from kind of app payments. But I think from my understanding and to what Justin said earlier, regulation and making that piece tie in is always the challenge when it comes to integrating payments. Is that right, Justin?
Well, I think, yes and no, it's part of it. The overall payment services industry and card industry has changed so rapidly as well over the last 5 years as a result of the explosion in fintech. So whether it's wallets for super apps of Grab and some of these other players, or just virtual card programs, or third-party card providers and prepaid credit cards. So I think a lot of excitement's already there and done. But what tends to actually happen more from the regulatory perspective is the issuers that stand behind these. So they tend to work on regional bases. So whether that's Europe and so whether it's Europe, Middle East and Africa, Asia, and what's happened so far in many cases is as Tim mentioned, you don't have this global integration from Apple paid from one country to Alipay in another, and some of these things are being worked through, and I think we'll see some significant changes there as well. But I think it's just a matter of time rather than anything else as the market continues to evolve.
From a question from me, in fact, how significant is Visa coming into the cryptocurrency space via Ethereum? So Visa recently made an announcement that they're going to settle USDT, I believe, on the Ethereum blockchain. How significant is that? Because a lot of people have been saying this is a really big step.
I think
absolutely. Okay. So initially, I'm kind of talking the kind of history with it. Being initially, when we launched Wirex, being that first crypto card company on the market, everyone was warning about Visa, MasterCard, that you're violating, terms and conditions, and they were very anti-crypto. They had shut off a lot of the issuers initially, the people that were abusing the program. So just 5-6 years later, just to see how this has actually just progressed, it is pretty astonishing actually. It's actually a day I didn't even think I would see at this point, when they've kind of built out programs themselves, and it's great that they've seen the value and the utility in stable coins and how it should be integrated into their card infrastructure. So it's the start of something that's going to be big. It is a rigorous process to get through and becoming a principal member with one of them, which is understandable, and that's kind of ultimately where we'd like to get to as well.
I think on that as well, it's not just Visa. It just plays into the broader interest overall on a longer term basis about what does the infrastructure of DLT look like. Of course, you get a lot of focus, a lot of news attention on Dogecoins, Bitcoin prices going up and down. We've been through NFTs, decentralized finance. There's always going to be a flavor of the day. But when you take one step back and you look at institutions like State Street, trying to understand what type of custodial solutions they can bring, if you look at just the pedigree of that institution, whether it's insurers, Aon are looking at doing proof of concept in the market, you're starting to have these household TradFi names or traditional quite staunch institutions really start to put people towards this. What does this look? Because these guys are looking at this for what does it look like in 3 and 5 years and 10 years. They're not taking a 3-month view. So I think whether it's Visa on the card side or whether some of the other names I just mentioned, I think overall it's very supportive of finally an acceptance of the benefits that can come from distributed ledger technologies, and trying to understand what that looks like going forward. And we've also seen this with some of the banks as well. So we've seen quite a few traditional banks have some interest through their corporate venture capital arms into actual DeFi protocols as well. I think Alpha Homura is an example of the Thai bank, and we're going to see more of this. So I think it's important, even if it's fact finding at this stage. But what it shows is that there's some proper, serious attention being paid to this industry and trying to understand those efficiencies it brings and how it actually helps people and how to help grow that out.
Yeah, this week we also had Goldman Sachs declare Bitcoin its own asset class, which was quite exciting. And then what happens if the SEC approves Fidelity's Bitcoin ETF? What happens then? What do you think?
I think it drives more interest towards Bitcoin, but it also, I guess one of the, we've touched on this already here today quite a bit, which is this volatility. So by nature, an ETF, whether you have an ETF tracking an index, for example, in the US, and we've seen explosions in ETFs. It's over a $300 trillion market from pretty much also nothing 20, 30 years ago. And it's been incredible. And you've got these low cost, cheap, passive tracking instruments. To have one with Bitcoin's fantastic. It's not going to remove that volatility, but as more people accept Bitcoin as an asset, or it's an asset class or a hedging instrument, whichever way they want to approach it. And of course, Ethereum is now starting to really come through in the sense of that utility and being viewed in the same way, the more the versatility in terms of the usage and these traditional types of products you can put around it, over time, it should actually reduce that volatility. So I think these actually help in terms of moving the market forward.
Yeah, pretty exciting times, I think, despite the roller coaster we've had over the last week. Okay, so to jump back into questions then, we have one from P Mononoke, a reference to one of my favorite Ghibli animations. I would like to hear more about Rebecca, her background, and what plans does she have for communication strategy for the
Tim, you want to answer that one?
Yeah, well, so as I said at the beginning, my name is Rebecca Jones. I was a financial journalist for a very long time. So I was a financial journalist for about 10 years in the UK. So I have a good background in traditional finance, which is why I was just boring Justin with those questions. I have specialized in cryptocurrency for the last couple of years because it became very apparent to me as somebody writing about traditional finance that cryptocurrency was the future. It became very, very obvious to me quite quickly. So I've been working with Yield since around September, October time. And yeah, I'm now heading up the communications strategy, and I'm taking some experience that I gained working for some pretty big traditional finance names on the PR side, and also in-house for a couple of investment managers. I think the most important thing for me is that we start to reach out more and more. Yield already does a really, really, really great job of reaching its users and reaching out to its community, and that is the whole point of this venture, is to make DeFi available to everyone. So I want to expand that mission, doing things like these YouTube videos. We're going to have a new series coming up as well, where we're going to be bringing on experts and influencers twice a month. We're going to make sure we do a lot more AMA work with Tim and Justin, who are both thrilled, I know, to be doing more of these. And we're going to be feeding back with the community to find out what you want to see, make sure that we do more of that, and effectively just keep sending out the message that we've been sending out from the very beginning, which is DeFi for everyone, and we're the platform that's going to facilitate that. So yeah, that's my job. That's what I'm going to be working to do. And if I do a good job, you'll see me stick around. If not, I guess you'll see a new me. Hopefully.
Thank you, Rebecca. We're pretty confident you're here to stay for the long term. There's no concerns there.
I think so. Okay, so we have another question here regarding Cardano. Would you consider migrating to, is it Cardano or Cardano? I'm never really sure how to pronounce it. Once their Alonzo project has been rolled out using the ERC20 converter, and that's from Loz Cox on Facebook.
So in short, we have no plans on migrating completely to another chain. However, we plan on being compatible. So there will be these bridges, these converters. So we kind of welcome the Cardano community and everything that's going to be happening over there. And our DeFi team is also kind of exploring very heavily everything that's happening over there and is coming down the pipeline.
Okay. Fantastic. And let's take one more live before we go back for our closing question. Okay, hi team. Will there be any intention to adjust the amount of YLD required for each tier in both the short and longer term? And that's from Tech on YouTube.
Yeah, so in short, there will be at some points. So we're kind of evaluating things as we continue to grow. So eventually, as we reach hundreds of thousands and millions of users that we're kind of on target to kind of be able to offer yield out to, the economics simply is going to have to continue to be modified. So we're still planning out what that long-term strategy looks like, but ultimately, want to be able to offer yield out for millions of people. So understand that the current makeup isn't going to work long term, but it's just be able to, how do we take yield up and be able to offer said millions of people worldwide high interest yielding accounts. And so there will eventually will be changes, nothing concrete now, and nothing that's going to be done in the short term.
Okay, great.
And any changes that would come through would be made very mindfully, of course, of the people that are already members of the platform or users of the application. So.
Yeah, absolutely. I mean, that's definitely, lowering barriers to entry where we can is important for sure. So I think we will keep everybody updated with any changes that we make. But as Justin says, being very mindful of our current.
As with anything, I mean, early adopters will always, come out as the benefactors in any changes. So.
Yeah, absolutely. Okay, so let's move on to our final closing question, which comes from How1166. What are your major goals to achieve in the next 3 to 4 years, which is a very long time in crypto? What are your plans to expand and gain more adoption? How will Yield App elevate crypto participants' understanding about the project? Wow, okay, so that's a big one. So perhaps let's start with what are the major goals to achieve over the next 3 to 4 years, and which includes expanding adoption. Tim, do you want to take that one?
Yeah, I'll kind of start. And it's a great question. It is hard to think so far in advance. But about a year ago, like when we got really kind of heavily involved in DeFi, and I guess mid-August was the date. I kind of put a flag into the sand and said that I'm starting a new startup and this is what it is, and started to move forward on that. So in about 9 months, we've come quite a ways from that first kind of idea of what we're going to be building out to where we are now. So by the end of the year, we see that everyone loves to talk about that version 2.0, and I'm very excited for what's coming out. We think it'll, for the most part, fully be rolled out by that time. However, it is a continuing evolution. So I think everyone that's been around and you've seen any companies grow, I mean, it takes time and often, a few years to kind of build out. So I think for our current roadmap, we're about 12 months out for fully kind of realizing that full roadmap of that very intuitive mobile application that you can be able to have your high interest bearing accounts powered through DeFi and just crypto. So overall, I think there's a few things that we're going down. I mean, crypto banking is real. It is here. We are one of these crypto banking companies. There's other ones out there, and we feel that we have a good chance to be right up there at the top of these crypto banks essentially worldwide. And we got a really fantastic team that we've kind of assembled, and more talent that is coming on board. And when you kind of break it down, I mean, that's what it's all about. A company is people, right? So we do have a great collection of people, and continue to build that out. Based on a constant basis of people's talent that's coming to us. So we have growth metrics in mind of where we're really hitting, and I see hitting that millionth user and that $1 billion that TVL. It's coming quite soon. We're going to really wrap up marketing once we've kind of get through this little phase right here, and essentially get to this new platform kind of launch, and we can really push it very aggressively kind of moving forward. So I guess my marketing team is we got this catapult kind of loaded and ready to kind of spring, and a lot of great things happening. But overall, it is one step at a time, and make sure that we just don't take any missteps kind of along the way. So 3 to 5 years, that's it is hard to kind of think that far in advance.
3 to 4. 3 to 4. So we've already promised $1 billion. Okay. In 3 to 4 years.
I think we're coming. I do anticipate this is coming kind of sooner than later, though, on that. So, I think by the time we, get out to that 3-4 years, it's I think by just crypto overall will have continued to evolve, and as decentralized finance just continues to evolve, we just want to be working with the leaders in the space and just continue to evolve with the space. So.
Okay. Justin, did you want to add anything on the brand?
I can, because there's quite a lot of different timelines in there and different moving parts. So I guess just some of the key things that Tim's already mentioned, and of course, Rebecca, you've introduced yourself on this video interview as well. So the people are super important, and whether that's the development team, the compliance teams, the operation teams, the marketing teams. We have Sapto in our community who's much loved. You know, it takes a lot of different people to coordinate and come together to make this happen. So, you know, on the development team side, people are working around the clock. We say that each time, but it's not actually a lie. People are actually working around the clock towards some of these deliverables. So, you know, are we going to have the whole thing in 3 months, as Tim mentioned, with card programs and Apple Pay and everything we ever want in a roadmap? No, but we will do this on a processed or on a step-by-step deliverable basis. So we will have the wallet infrastructure out, and that will be soon. We will have our product capabilities. We will continue to add users and grow that portfolio out. But I think, you know, certainly whilst the markets are like this, the next few months really is this consolidation as much as anything else. It's about making sure we have the right people, the right systems, we're doing all the right things, so we have that springboard. Because, you know, from here it's about how do we really take a much bigger leap. So yes, can we have 500,000 users and 500 million in assets under management by year end? Well, that's a target. I think it's very achievable. But it also requires that, as Tim said, we don't make missteps and that we bring everyone together and we take on that journey together. So we have big ambitions. We have the right people. We're certainly moving towards those goals, and it's about continuing to make that happen.
Yeah, and it's very important to, you know, ensure that mistakes don't happen, because they can happen and they can be very costly, as we saw recently in the space. I can speak personally a little bit to the last part of that question. How will we elevate crypto participants' understanding about the project? Education is something that's really, really important to us at Yield App, and I've actually been involved in creating educational content from the very beginning. So on our blog, we have a very large series of educational content that we're going to be pulling together into what we're provisionally calling the Yield Diversity, but, you know, patent pending on that one, that may change. So we want to make sure that we can take people from the very beginning of zero knowledge right to where they need to be with some really easy to understand educational content. We also very recently published the Beginner's Guide to DeFi. So that's an ebook that you can download from our website as well. And we always like to make sure that we're putting lots of infographic content on our social media channels. And as I say, we're going to continue to engage a lot more through video content as well, because education is really, really, really important. I think if, you know, I can speak for everyone when I say that if DeFi is going to reach its full potential, then it's only going to do so if we're able to educate people, make them feel more comfortable about coming into the space, helping them to understand, you know, what the risks are and how to manage them. That's, you know, all very important stuff. So I think that that's a key part of what we do, and will continue to be a key part of what we do, for sure. Education is really, really important. So I think we should probably wrap it up there. We're at an hour. I think that's all we've got time for. So thank you very much, Tim and Justin. I hope that everyone out there has found that useful. I know that I did, especially the questions around the industry, which continues just to get bigger and better all the time. If you did hear your question read out, do keep an eye on your direct messages, because our team will be in touch and you are a winner of an exclusive Yield App merch pack. So we will see you next time. Keep an eye for the next time and date for a live stream AMA. We will be doing them a lot more. Thanks again, and we will see you next time.
Thanks, Rebecca.
Bye-bye.
Thank you.